Well, it looks like the stimulus bill is going to pass on Tuesday. I'm on record already as saying that I think this is the wrong approach. It emphasizes government spending rather than the creation of jobs, which is what we need right now. I'm all in favor of all of the goals our new president has and the Democratic Congress has in terms of doing infrastructure and all the rest of it. But I don't think this is the right time for that. This country is on the verge of economic death. People are being laid off by the tens of thousands every single month. So what I wanted to do was put money in the hands of these people in the form of cash vouchers to go look for work at a new national job bank, and employers would line up there and receive up to $30,000 cash vouchers from these unemployed people, and they would get put back to work. That would immediately solve the problem. That's the shortest distance between 2 points. However, I'm not in Congress, and the president hasn't been listening to me, so they went ahead and they passed their version of a stimulus bill. I wish them well. I don't think it's going to work. I think it's misdirected, and I think it's largely wasted money. So I do agree with the Republicans, but they were not creative enough to propose a decent alternative, either mine or one like it, that would jumpstart the effort to getting the people that are laid off back to work immediately. This is a terrible situation, and it could have been solved by a very simple piece of legislation, creating a national job bank, giving people cash vouchers to go and apply and be hired within 90 days. It would have solved that problem. It would have restored public confidence. Instead, what the administration did was follow the pork barrel suggestions. No, not pork. Some of it was good stuff. But we don't need to be spending money right now on remodeling classrooms when we've got people lined up in unemployment lines. We should do that later. And they got it all reversed. So it was a bad move, President Obama. I wish you well, though, and I hope it does work. I hope I'm proven wrong, but I don't think this is going to happen for you, sir. Again, it's because you listen to your little inner circle and you pretend to listen to the American people, but you haven't even responded to my phone calls to you, and to my letters to you, and to the various emails that I've sent to your administration. So obviously, this is just window dressing as far as listening to the American people is concerned. If you do happen to get this by some miracle, please give me a call at 1-877-365-0042. Again, it appears that that's over with. That battle's over with. I'm a practical man. You're going to go ahead and sign that bill on Tuesday, and good luck with it, sir. I think it was a wrong move. I have been watching Meet the Press today, Mr. President, and also the ABC program with George Stephanopoulos, and I want to weigh in here because we're coming now to the most important part of this economic recovery plan, and that is banks and credit. What do we do about this situation? Let me give you the street perspective of this, Mr. President. During the last 8 years, people were encouraged to buy homes, and they were approached by loan brokers who said to them the following: look, there's that $100,000 home you want to buy, Mr. and Mrs. Jones. We're going to let you have that home for nothing down. You have a reasonably good credit score. You've been on the job for maybe a month or two, but your credit's good. We're going to loan you the money on this $100,000 home. So what we're going to do, at nothing down, we're going to let you have a zero down program. And then since it's difficult for you to qualify on the money that you're making, we're going to have an adjustable rate mortgage. We're going to reduce the mortgage to just $500 a month, so you can get into the house, buy furniture, put up drapes, get new appliances, and all the rest of it. And then in 5 years down the road, after your income goes up and all the rest of it, we're going to change that to $800 or $900 a month. Just sign here. It's all in fine print. Hey, you and Sally want to move, don't you? So let's just sign this and get you in the house. So what happened? That was not only $100,000 homes. They were doing it on $200,000 and $300,000 homes and $500,000 homes, letting people move in if they had good credit for nothing, very little down, for zero down. They didn't require them to be on the job very long. As long as they were on the job, 30 days to go on and move them in the house. Evidently, they just wanted to move a lot of houses. The builders did, and the loan mortgage brokers wanted to make a lot of commission. So they put this bait in front of the American people of zero down, adjustable rate mortgages, and the American people bought it by the tens of thousands, and they got into their homes. Now, 4 or 5 years down the road, these adjustable means they go up. So these adjustable rate mortgages go up, And now instead of spending $500 to $800 a month, the house payment is now $1,600, $2,000 a month, and the people can't afford it anymore. Mama has to go to work, but she goes to work and has to put the babies in daycare. The daycare runs $1,000 a month. They basically lose the home. It goes into foreclosure. Now we have a $100,000 or $200,000 home that goes on the foreclosure market. It goes to HUD. They put it up at public auction, and the houses are sold for 50 to 60 cents on the dollar. And now the $150,000 home is worth $80,000 or $90,000, which brings down the home values of everybody else on the street. And this asset is now considered a toxic or a bad asset. Now, whose fault is this? Is it the people that bought the houses? Should they be the ones to be blamed for this? And should we say, tough luck, Sally, pack your bags and move to the homeless shelter? Sally and Bill, move to the homeless shelter. Was it the banks? Was it their fault for creating these instruments that were designed to fail because there was no way in the world you could loan money? People go into a home expecting a fixed interest payment for 30 years. You can't assume the economy is going to be booming 5 years down the road and that people can afford to double their house payment. You can't assume that that employers are going to give raises to people in order to cover a brand new house payment. The original mortgage as it was created 40 or 50 years ago was for people to count on a fixed payment. And originally it was designed to where one half of it would go to interest and one half of it to principal from day one so that people could build equity more quickly. Then I don't know who changed it to be a good research project for you to look into it. Now on a $100,000 home you have $200,000 in interest. The interest is paid first and nothing goes to the principal, or a very small amount goes to principal. This is theft as far as I'm concerned. Not only are the rates usurious, in my view, no rate should be higher than 8%, but every payment that goes in, one half should go to principal and one half to interest. But anyway, that's not the way it was. But the biggest problem was, even with that unfair way of putting the interest up front as it exists today, they would adjust the mortgage to where it doubled in 4 or 5 years. And that's a formula for failure. These loans were then packaged up and sold in the secondary markets to Fannie Mae and Freddie Mae. They bought them, then other people speculated on them, bet on them, derivatives were attached to them, and they became what's known as toxic. Now bear in mind, these houses are not toxic. They're still good. They're still good inventory. They keep the rain off your head. They give you a place to go cook and a bedroom to sleep in and a place for your kids to come home and be safe. The house is not toxic. It's the financial instruments around the houses that are toxic. Now listen to me, folks, okay? Was it the homeowner's fault? Yes. Was it the bank's fault to loan the money and structure the loan that way? Yes. Then how do we fix the problem? Well, whatever a man sows, a man reaps. The homeowners that made the mistake of not reading the fine print, God bless them all. I understand what I'm saying is going to be hard on you. You made the mistake, you have to pay for the mistake. You drive too fast, you get a traffic ticket. You write a check and there are not enough funds in the bank to cover it. It's a bounce check. You either pay it or go to jail. It's just as simple as that. The law of cause and effect. Were the banks at fault? Yes. They were smart enough to know that putting people into these houses and betting that they could pay a double payment 4 or 5 years down the road was a stupid thing to do, because they'd end up with a house in foreclosure. So the banks are at fault too. Was it the Federal Reserve's fault? Yes. We can spend all day long talking about Alan Greenspan and loosening up the credit to make all of this possible. It doesn't really matter whose fault it was. How do we fix it? First of all, we have to understand that this system of the Federal Reserve, creating money out of thin air, fractional banking, charging us interest on our own money, is the wrong thing to do. As I've advocated, go back and see my earlier tapes. For the first thing we have to do before we offer any fixes, and on my next tape I'm going to have the solution for you, but there's no point in me giving you the solution until we get to the root cause of the problem, and that is the fact that the American people don't have their own currency. We're paying interest to the Federal Reserve and the banks that own the Federal Reserve on our own money. Until that is resolved, whatever solution I give you is not going to work. But I'm going to propose a solution, but first of all, we got to fix this Federal Reserve problem by putting it under the Department of Treasury. Thank you, and I'll talk to you again tomorrow about the solution.